Hi all, this is Ashish Kyal here. Welcome to Elliott Wave News channel by Wave Strategy Advisors. And this is again Friday at 4 p.m. We discuss about the technical state of the market using various different technical indicators and the current what to expect next. So today I'm going to discuss five important indicators or five important technical studies which I use regularly in order to forecast the market and to understand what is the overall trend and where is the breakout direction expected. But before I kick start with that, a few observations over past 1 or 2 weeks are uh, we have seen some huge negative news that has come up, but the markets have not reacted anywhere, and especially Nifty, if you check, it has not reacted to anywhere. So, for example, there was a rate hike by Fed. I mean, it was widely discounted, but the global markets were still extremely negative when this happened. And if you look at Hang Seng, it was down by nearly 370, 400 points at one point of time. Nikkei was negative, Shanghai was negative. So even after all those things happening, Nifty opened lower around 8122 levels, but quickly recovered back and went towards the zone of 8225, 8230, which has been an important resistance for past few days. And this itself shows that there was some kind of a resilience, and despite of that negative news, we have not moved anywhere. So event has not been moving the markets. Same thing last week, we had a RBI meet, and post the RBI meet, when there was no rate cut, Nifty reacted just temporarily on the negative side, but formed an important low and again bounced back. So there has been no news that has been moving the market. Secondly, a classical example again, if news drives the market, is Axis Bank. I mean, Axis Bank has been all over the news for what has been happening with fake accounts and other issues that everyone is talking about. But at the same time, if you look at the stock price, it has managed to outperform. It has managed to outperform, in fact, the entire banking space. So Axis Bank has been moving higher. So if stock prices react based on the news, then this shouldn't happen. And so the case in point is news are not driving the markets. It's the probably the sentiment, the psychology about what's going to happen in future that is driving the overall market. So now let's try to see on the charts which are the five important indicators which I look forward to in order to forecast where the markets are headed. And I will go in the order in which I apply them on the chart. So let me open up my share across the screen that shows Nifty chart. And okay, if you can see the screen over here, you can see various different studies applied. Do not get nervous about what all things are applied over here. Let me take one thing at a time. The first thing I do on the chart is to look forward to drawing a channel. If there is a meaningful channel, and if it is making sense to connect that channel. So the first thing I have to do is to see if I connect the lows over here and draw a channel. Do I get any kind of a reversal zone? So this is a very short-term channel I am talking about right now. And let me make it a thick line and not just a thin line, because it is a zone that one has to understand. It's never going to be a single point, but it's going to be a support zone. Over here, if I look at this chart, I find out, okay, this is a parallel channel within which price have been working. It has been managing to move within this channel. That's one. So trying to understand the trend lines and channels is the most important thing that you can do on any chart, whether you look at Nifty or you look at stocks or you look at commodities like crude, gold. The first thing that one has to do is to draw the channels. That's the most important, and the basic things which I even teach in my training classes. I explain them the whether to practice new wave. I'm a new wave practitioner, by the way, but I look at the most important thing is to understand the trend. I need to understand whether there is a meaningful channel which we can use. Okay, that's one. Second, this is a short-term red channel. Secondly, there is a medium-term black channel over here. Medium-term, not black channel, I would say, but a black series of channels. Because if you remember, a few weeks back, when Nifty was capitulating and everyone was talking about 7,600, we came up and said that there is a parallel trend line to the spike low created on the event, and this parallel trend line is going to be very important, and this parallel trend line was a parallel line to the channel which was drawn up earlier, and it worked wonderfully well. If you check, even now this channel has worked well, and the price bounced back from there and moved higher, so it worked very well. Currently what we are witnessing is after prices broke below the black trend line, which is this one, it managed to cross back above over here, and now it is retesting that same trend line. So that is again an important point, where the black trend line, which was earlier acting as a resistance, is now going to act as a support, and we can clearly see price have been drifting and finding the support on this trend line again and again. The next important thing you have to observe is the intersection of the trend line. So over here there is a black and red intersection of the trend line, and the intersection are very important on any concept. If you apply trend line concepts, the intersections are very important areas over here, which is the low of today created. Okay, so that's important. So the first indicator I use, or the first technical study I use, is the channel. The next technical study I apply on the chart is an indicator. I use RSI. I mean, you can use ROC, MACD, and there are stochastic. But I use RSI because I use RSI in order to see if it is providing any kind of a range. I do not use it to find out extreme overbought like 70s or 80, because what I try to find out if it is providing any kind of positive divergence, and if it is providing any kind of a range. So if I see RSI moving towards the 20 levels, for me it is indicating that the trend on the downside is very strong. If tomorrow I see RSI moving towards 80 level, for me it will indicate that the trend on the upside is very strong. So that is how I use RSI, and also to understand if there is any kind of a support or extreme level in the RSI. So this seems to be the support zone for RSI right now. Over here around 32 is the support level, and on the upside we can see that 70 or around 65 has been the resistance level. So we need to understand, based on RSI, what are the reversal areas. So that's the second thing I use. The third thing that I apply frequently on the charts, in case the markets are moving in a sideways action, Bollinger bands become extremely important. So over here you can see the application of Bollinger bands, and can you see the bands have been turned absolutely flat. Over here price have been drifting lower. So for us to see a downside breaker, I need to see a very strong move on the downside with a gap, probably with a gap which is sustained for a day or 2 days. So that is going to be important for me. And otherwise I would expect this market to keep trading in a range. We can now expect again it to move higher towards the upper end of the Bollinger, again move lower. So the Bollinger bands work very well for providing support and resistance in case of a sideways market. The fourth thing that I use on the charts is the Fibo levels, which you can see, the Fibonacci levels, which you can see here. So Fibonacci is again a very important concept. Now I do not apply it arbitrarily between just highs and lows, but I use wave counts in order to understand where the wave started, where the wave ended, and then I apply the Fibonacci from those areas. So as per the Fibonacci, 76.4% is something which I have observed works very well for Indian markets, and it has worked well in the past. For many years we have been using it, so I'm assuming it's going to be working well even now. And the fifth thing that we use is the Elliott wave or Neo wave, which is the advanced part of Elliott wave. Now you might say that Elliott wave is the fifth order which I'm talking about, but trust me, wave counts can be tricky if you do not apply these concepts. If you do not know channels, it becomes extremely difficult for us to understand what are the turning areas or the turning junctures. If you do not know whether the markets are in a range or it's in a trending mode. So Bollinger bands help us to understand whether markets are in sideways range or it's probably trending. So you have to apply all the concepts together. You have to apply, and then the Elliott wave helps us to understand what is the overall structure of the market, what are the likely probability of it going higher, which are the key areas which help us, key levels, I would say, support or resistance, which will determine a clear breakout. So for example, as of now, the preferred scenario remains like before, that we might have wave A on the upside over here, then we might have completed wave B, what we are seeing right now is the wave C, which is ongoing, and within wave C there are probably 1, 2, 3rd and 4th, and then 5th wave happening. So those are the internal counts. But along with that, the channels. So over here you can see this is a very important juncture. So the level of 8121 is going to be crucial. Level of 8122 is going to be crucial. That's an important level that one has to keep in mind. On the upside, the resistance is around 8,300, 8,400. So if you apply Fibonacci and you apply Elliott wave, you can say with high conviction, okay, what will be the direction. But at the same time, you need to be aware about the alternate possibilities in case market doesn't play out the way we expect. Always remember, whatever we talk about or discuss is all about probability. There is no certainty, and within this probabilistic, we need to play out, or a trader has to play out a higher probable scenario that looks more likely. I'm sure the sideways action of past few days might be frustrating for many traders, and especially if you are an option buyer, because value has been deteriorating. So, but I think that a trending move is now due to emerge, and a very clear outlook will be published in our daily research report, where we will mention exact level above which the next trend will start on the upside, or probably the support level below which the trend might be in danger. And on a bigger degree chart, I think we have completed wave D over here of the trend which started in February. We are currently in wave E in the form of an extracting triangle, and post the completion of wave E, we might start seeing some strong reversal and very strong trending moves. So stay tuned. I'll keep posted over here on the Elliott Wave News channel, an initiative by Wave Strategy Advisors, where we will keep learning about various different techniques, various methods about technical analysis in a very short video kind of a stint. And if you have any queries, feel free to write to us at helpdesk@wavestrategy.com, or contact us on 99-204-22202. Also, you can please post your charts on our discussion forum at wavestrategy.com, and I'll be more than happy to probably respond back as and when possible. So in a nutshell, the 5 techniques which we discussed today and which I use personally as the most important tools to forecast the market. The first thing is the channeling technique. You need to have the cluster of supports and resistance based on the channels. The second technique, I apply an indicator, probably it can be RSI, ROC, or any such other indicator. The third technique that I apply is always going to be, in case of a sideways market, Bollinger bands. The fourth technique that I apply is probably looking at the Fibonacci, but that has to be combined along with the Elliott wave count or the Neo wave pattern that we are seeing. And at times when the markets are at crucial juncture, I apply time cycles, which is again very important. So in order to identify key turning areas, both from the bottoming pattern, bottom formation, or from the topping pattern. So time cycles again is very important in order to understand the reversal areas and timing the market. So this is it from my end for now. Have a wonderful weekend ahead, and stay tuned again next Friday 4 p.m. and the recording of the same video will be available on the website at 5 p.m. so you can watch it from there again. Thank you very much, and see you again soon next week.